Alright, so I'm starting with $100 and flipping it into 1,000 trading stock options, specifically day trading SPY options. So I'm going to pop over to SPY. My strategy is to let the first 30 minutes go by, so I don't do anything until 10. And then as you can see down here, there's a little sun icon. That's 9:30 when the market opens. So I wait till 10, which is about where we're at now. And then I come up and I mark the high point, which is the highest point that SPY has gone thus far, and I mark the low point, which is the lowest point that it's gone thus far, and then I wait for it to break past this, either to the upside or the downside. What I'm looking for is for a candle to close either above this line here, this resistance line to the top, or below this support line to the bottom. And when a candle closes either above or below that line, then I'll get in the trade and I'll play it to the next zone. Now for the next zone, I just scroll to the left. Like for instance, for the to the downside, I just scroll to the left and I look for some support. Like right here, you can see there's some, got stuck there and bounced down before. So there's a nice little resistance there that I'll look for to turn into support. Same thing here, another point that it got stuck and bounced down. So another little resistance that I would look for to turn into a support. So that's 2 points to the downside that I could play it. Now to the upside, it can be a little tricky if the price is extended high. Normally I would just scroll to the left and do the same thing I did for the downside to the upside. I would just look for 2 points of resistance where it got stuck previously, and then bounce back down, and I would mark those, and that's where I would play it to the upside. However, right now it's kind of extended. It's like at its highest that it's been lately, so I would have to scroll for a long time, if any, to be able to find a point where it got stuck before to the upside. So the way I would handle that is I would just simply get in when a candle closes past this resistance line to the upside, and I would ride it up until the momentum stops, right? So if it's on its way up, it's on its way up, and then I'm in, and then if it starts to consolidate and trade sideways, I'm out. Or if it starts to turn around and drop, I'm out. So as far as to the upside, I don't have any targets per se to aim at, because there's nowhere to mark. It's higher than it's been recently, so there's no resistances that I can just scroll over to the left like this and see and mark, and then you know, look for a place to get out when it hits there. So if it does close, if the candle does close below this upward line, this top line, this resistance here, then I'm just gonna have to play it up until it starts consolidating or until it starts reversing. So that would be a trickier trade. If it breaks this support line down here to the bottom, that would be an easier trade, obviously, because then I can just play it to the next line of support that I found, which is the line right below that. So I'd be playing from 472.45-ish, let's just say, to 472.10-ish, right? So I'd have like a, what, 35% move, 35-cent move on that. So that would give me like, what, 25% on the contract at least, if I rode that and filled out that gap. So that's solid. And then I could also continue to hold and play it till the next line below. So that would be 471.70-ish, let's call it. So it just kind of depends, you know, on my faith in the trade. So for example, if a candle closes below this line, I can get in real quick, I can play it to the next line, and if I'm not confident that it's gonna go, keep going down, I can get out there. If I am confident that it's gonna keep going down and it's gonna keep dropping, then I can play it to here. Usually the way I like to do it is I like to mark the high and the low of the first 30-minute range. It's basically an orb strategy, an ORB strategy, an opening range breakout strategy. But instead of playing the first 5 minutes or the first 15 minutes, I play it on the first 30 minutes, okay? I'm playing an opening range breakout, breaking out past the range that it's been stuck in for the first 30 minutes of the trading day. So I like to mark the high and low that it's been in the first 30 minutes, and then I like to mark like 2 resistances above that point and like 2 supports below that point. And then when it breaks, when a candle closes either to the upside or downside below this resistance or support, I like to play it to the next resistance up, or even the next one up, or the next support down, or the next support down below that. So that's how I really like to play it. But like I said, considering there's nowhere to mark to the upside, I'm just gonna have to kind of guess. I'm gonna have to kind of be winging it and flying in the dark here, so to speak. If it closes above this line and I get in, I just have to ride it till it starts to slow down. So that's the plan for today. That's how I trade in general right now. That's my strategy at the moment. It's been pretty profitable for me lately, so I'm gonna use that to flip this 100 into 1,000. That being said, now that I explained all that fun stuff, I'm gonna go ahead and cut this video off, and then when the price breaks to either the upside or the downside, I'll get in and I'll record that, and then I'll cut it out and come back in whenever I get to the take profit or stop loss, and then I'll record that as well. So let me cut this for now and come back in when it looks like it's going to break this to the upside. But either way, I'll come back in when it breaks either this resistance or support, and I actually get in the trade, and we'll see what's up. All right, I just got a price alert. The SPY's moving to the upside. It broke the level that I was watching for it to move to the upside, and candle actually closed above that level. So I'm going to go ahead and get in with this $100. The only thing that sucks is the contract I want that's in the money is $109. So I'm just out of range of that. So I have to get this out of the money contract. Let me look at it. Volume's 46%. Theta's 0.5. Not too bad on the time decay. Delta's 0.4. So the contract moves decent as the price of the stock changes per dollar. Implied volatility is 13. That's decent. Call, open interest on the call rather, 9,500. Only 1,400 in the put. That's a good sign. 106,000 for volume. I like anything that's in the six figures. The volume's good. So let me pop over and grab this $50 contract here. I'm just watching the price right here in the middle of the screen. You can see SPY price in the middle of the screen. I want to see if it holds 473.65. So I'm watching for 473.65 to hold. If it does hold 473.65, then I'm going to go ahead and jump in. Let's see. 63, 66, it's kind of bouncing. I'm looking for it to hold 473.65. If it holds that, then I'm going to jump in. Yeah, it looks like it's going to hold 473.65. So I'm going to go ahead and jump in for the 48. See if I can get filled on that. Let's see here. Did not get filled, so you have to go over to orders, modify the price. See why it didn't get filled. I'm at the mid price, that's why. Now it's 50. Alright, I'll pay 50. I'll modify my order to 50. That's probably as high as I want to go on this one. Let's see if that gets filled. Alright, it did. So now I'm in the trade. As you can see here, I'm currently up 4%, $2, 2%, $1, whatever now. So that's cool. Let me pop back over here. My stop loss is now gonna be my line that was resistance. I'm gonna make that support, so 473.65. I'm gonna change that from price above to price below, and I'm gonna get out if a candle closes below that. I'm not gonna get out if a candle wicks below that line, because that's how they fake out a lot of people and just do a quick liquidity grab, and then anybody that has like automatic stop losses set, as soon as that wick touches below that line, it'll cut them. It'll cut them out of the trade, and then it'll squeeze back up. I've fallen for that too many times, so I don't get out when it wicks below my stop loss. I only get out when a candle actually closes below my stop loss. So the only negative of this trade is, like I said, I don't have anywhere to aim for to the upside, because I couldn't find any previous resistance where it's been lately above this point. So I just kind of have to eyeball this trade and see when it starts slowing down or see when it starts reversing and then get out. That's the only negative, but I have a stop loss at least. If it closes below that 473.65, then I'm out, and that's the stop loss. So I'm not going to let it go any lower than that without pulling out of this trade. But like I said, I don't get out if it just wicks below that point, because that's how it fakes people out, man. That's why I don't use automatic stop losses anymore. I only use manual stop losses, because that wick will squeeze right below that line. Your automatic stop loss will get triggered. You'll get taken out of the trade, and then it'll turn around and go right back up. And just grab quick liquidity sweep, and then it'll just go right back up, and you'll be out of the trade. So I'd have to see a candle actually close below this line for me to get out. Otherwise, I'm going to let it go to the upside. Like I said, I just kind of have to wait and look for it to start consolidating or squeezing back down and then get out, because I don't have a resistance point to aim for to the upside. However, it would be nice if it goes back up and breaks 473.85, because then I would have a better feeling that it's going to keep moving to the upside. I'm just looking for a quick trade. This is just like a scalp, so I'm just looking for like a quick 5 or 10 minute trade, nothing crazy. Maybe a quick 20-25%. Really anything between like 10 and 25% I think is solid for a scalp. Anything 20 to 30% I think is very solid. So yeah, once I get like a 10 to 20% profit, I'll pull out and think it's a pretty decent profit. Once I get between 20 and 30%, I'll pull out and think it's a pretty solid profit. So it's kind of my mindset on this one. I don't usually just pull out by percentages though. I usually only pull out when it gets to a specific resistance or support, or like within 5 cents of a certain resistance or support, because that's something I learned from a YouTuber that I watch, is that if you have a stop loss set based on resistance or support, and it gets even 5 cents within that zone, you should pull out, because it doesn't always go exactly to your take profit, but it generally goes within 5 cents of your take profit, or like it generally goes within 5 cents of a certain key area of support or resistance, you know, a strong support or resistance. So usually I just get in the trade, like say I would have got in when it broke VWAP, just for an example. And let's say this was my resistance line. I normally would get in when a candle closes above here. I would ride it to this resistance line, or until it gets within 5 cents of this resistance line, and then I would pull. All right, now the trade's up pretty nice, so it's time to move the stop loss. I want to move the stop loss to just below this candle right here. So the new stop loss is now 473.80. I'm not going to let it go down to the previous line now. So it would be 473.80 would be the new stop loss. So I'm just going to roll like that, because like I said, I don't have anywhere to aim to the upside specifically on this one. So I've got to be very careful as far as when to get out. So I'm just going to move the stop loss up just below the last candle. Starting to creep up pretty nice. Like I said, anything between 10 and 20% I think is a decent return. Anything between 20 and 30 I think is a solid return. So this one right here is at 17, so it's a decent return right now. It's on its way to being a solid return. So I'm just trying to give it some room to breathe to see if it can be a solid return. Still going to give it some room to breathe. Going to stay in until a candle closes below that stop loss that I just set. This would have been a lot better of a move if I was in the money contract. But remember, I didn't have enough. It was 108 and I only had 100 exactly, so I couldn't get an in the money contract. I had to get it slightly out of the money contract, so that's why this contract kind of sucks a little bit movement wise. There we go, we broke 20%, so I'm happy with that. 62 is 23%, so I'm just going to take that. I'm going to take 62, lock in the 23%, and just be satisfied with that. So let me see if I can get filled on that. Boom, got filled. Okay, cool, so I ended up getting 23% on a contract, 12% on the account if you round, $12 if you round, and then that puts me at $112, like I said, if you round. So that's a decent little start just for the first trade. The reason being is I just want to get over 100, because like I said, the contracts that I wanted were just above 100. I wanted an in the money contract and they were just above 100, so now I would be able to do that. As you can see, the difference is if you have 100, you can either get the $57 contract or the $120 contract. Like I'm so close to being able to get actually in the money. So any progress at all to the upside is fine for the first trade. I'll take it. Really, any progress at all in the beginning is fine. I don't mind the slow, steady progress. As long as I'm making progress to the upside, I'm happy with it. Just to get past that 100 range and get above that 100, so I can have a little bit more money to buy a little bit better contract, you know, to buy a contract that's actually in the money. I'll take anything in the beginning. As time goes on and the ball gets rolling, I want to make more money, you know, per trade. But for right now, I'm happy with anything, you know, with a 23% return on a $60 contract. That's fine with me, and I just want to get beyond that $100 mark so I can actually get contracts that are in the money. Because as you saw, my options were out of the money for like 60 bucks or in the money for like 110 bucks. So I was just out of the range of in the money. Well, maybe tomorrow, since I have 112, I'll be able to get an in the money contract. So just getting beyond 100 at all, making any progress beyond 100 really helps a lot. So that's cool. I'm happy with that for today. It was a little bit of a sketchy trade, like I said, just because I didn't have a point to aim for to the upside. I like to set the high range and low range, and then a couple places below that, a couple supports below that to aim for, and then a couple places above that, a couple resistances above that to aim for. I didn't have that today. I was just flying dark. I was flying in the dark. So the only thing I could do is just keep moving my stop loss up and just try to get out, you know, either when it consolidated or drop back down, or take my X percentage win. So for what I had to work with today, you know, having nowhere to aim to the upside, just flying blind and having to just get out for X percentage and just keep moving the stop loss up in case it drops back down because I don't know where to aim for, I think it was a win. I'm happy with it. I'm happy to make money today. So it's a good start. I'm happy with it.